Stop what you are doing. This is not a drill for New York's economy. Goldman Sachs is pulling 95 beaters in assets out of NYC, and the mayor is acting like this is just another headline. Because if you admit what this really means, you admit the city is losing control. Most people hear assets moved and shrug, but that is how collapses start. Quietly, paperwork, transfers, then the jobs, then the tax base, then the services, then the panic. Pause here. 95B does not relocate for fun. Big money moves when it smells risk or when it sees a better deal somewhere else. And when one giant moves, others start watching the exits. This is the part that should make you uneasy. NYC is not just a city, it is a system, a machine that runs on finance, real estate, and confidence. And confidence is the first thing to die in a shock. Now, think about what Goldman represents. It is not just another company with a logo on a building. It is a signal, it is a weather vane for institutional America. So when it shifts weight away from NYC, everyone asks the same question: what do they know that we don't? And here is where it gets worse. Because the mayor can't press a button and fix the reasons capital leaves. He can do press conferences, he can do slogans, he can do photo ops, but he cannot fake stability. When the balance sheets start voting with their feet, let that sink in. Balance sheets vote, and they just cast a 95B ballot against New York. Now, I want you to picture the chain reaction, because this is not about one firm. This is about the gravitational pull of the city weakening. Once that pull weakens, everything that depends on it starts wobbling. First comes the direct impact. Assets moving often means operations shifting. Teams get reorganized. New hires go elsewhere. Promotions happen somewhere else. Vendors lose contracts. Service companies lose clients. Commercial leases get renegotiated. Office floors go dark. Short punchline. Dark offices mean dead streets. And then the tax math hits. NYC runs on high earners, corporate activity, and property values. When high earners relocate, income tax softens. When corporate footprints shrink, business tax pressure rises on whoever is left. When office demand drops, commercial property valuations get hit. And when valuations drop, the city's revenue assumptions start cracking. This detail matters. Cities don't implode because of one bad month. They implode because the projections fail. Then the budgets fail. Then the cuts begin. Then the public starts noticing. And this is where the mayor starts losing control. Because once the public feels instability, every decision becomes a fight. Raise taxes and you push more people out. Cut services and quality of life drops. Borrow more and debt costs spike. Do nothing and the spiral accelerates anyway. Read that again. Every option is pain. That's what losing control looks like. Now, here's the uncomfortable reality. NYC has been fighting multiple pressure points at the same time. Remote and hybrid work changed the office economy. Commercial real estate has been under stress. Public safety perception has been a political landmine. And the cost of living is already squeezing residents. So when a 95B move hits the headlines, it lands on a city that's already tense. It's not the spark by itself, it's the spark near dry grass, and then something else breaks. Because this isn't just about the city government, it is about the entire ecosystem that depends on NYC staying inevitable. Think about who depends on that myth: landlords, retail corridors, restaurants, transit, tourism, universities, startups chasing talent, even the people who never stepped foot on Wall Street. When a major institution shifts assets away, it chips at the story that New York always bounces back. And stories matter more than people want to admit, because capital is emotional, capital is paranoid, capital is competitive. It runs towards safety and it runs away from uncertainty. Now consider the implications. If Goldman can move 95Bs, what stops the next firm from moving 20B or 40B or deciding the next headquarters expansion goes to Florida, Texas, or North Carolina instead? Here's the part nobody expects. It doesn't take a total exodus to damage a city. It takes a slow bleed, 1,000 tiny decisions, a relocation here, a hiring freeze there, a team split, a lease not renewed. A family that leaves because the numbers stopped making sense. Short punchline. A slow bleed kills just as dead. And the mayor's biggest problem is timing. Because if the city tries to respond after the confidence breaks, it's too late. You can't rebuild trust with a speech. You rebuild trust with outcomes. And outcomes take time. But capital moves fast. Now the situation becomes more dangerous. Because when revenue comes under pressure, political incentives get ugly. Leaders start chasing quick wins. They blame scapegoats. They announce task forces. They massage statistics. They declare victory before anything is fixed. But the market isn't listening to the talking points. The market is watching behavior. It's watching whether companies are expanding or shrinking. It's watching whether crime perception stabilizes or worsens. It's watching whether the subway feels safe at night. It's watching whether permits and regulations feel like a maze. It's watching whether taxes feel like punishment. Pause here. Even if you love New York, you have to admit this. A city can be iconic and still be fragile. Iconic doesn't pay bills. Stability pays bills. And this is where the pressure compounds. Because once a major firm shifts assets, it can trigger internal conversations in other boardrooms. Not, should we leave tomorrow, but should we stop growing here? And that question is poison, because growth is the difference between stress and collapse. A city can survive problems if it is growing, but if growth stalls, every problem gets heavier. Every union negotiation gets harder. Every budget season becomes warfare. Every promise becomes a liability. Now imagine being the mayor in that environment. You need to project control, but you can't control the macro forces. You can't control interest rates. You can't control global competition. You can't control corporate strategy. So what do you control? Policing, permitting, messaging, quality of life, transit reliability, small business conditions, and the tax and regulatory climate. And this is the terrifying part. Those are exactly the areas where perception can collapse faster than reality. A few viral incidents, a few sensational stories, a few ugly data points, and suddenly the narrative becomes New York is slipping. Let that sink in. Narratives move money. And if you think this is just about rich bankers, you are missing the real fallout. When the top layer shifts away, the shock hits everyone underneath. The doorman whose building loses tenants. The barista whose morning rush evaporates. The dry cleaner, the deli, the Uber driver, the maintenance crews, the entire invisible workforce that relies on density and routine. Short punchline. When the suits leave, the streets pay. So here is the question. Is 95 BDARs the warning shot or the first crack? Because if it is the first crack, the next stage is predictable. More transfers, more quiet relocations, more strategic realignments. And eventually, the city starts managing decline instead of growth. And then the real political crisis begins. Because voters don't care about asset allocations. They care about rent, safety, schools, and whether their neighborhood feels like it's sliding backward. If they feel that slide, they punish leadership, and leadership under threat makes riskier decisions. That's how control gets lost. Not in one dramatic moment, but in a sequence of smaller moments where the city reacts instead of leads. So watch what happens next. Not the speeches, not the headlines. Watch the leases, watch the hiring, watch where the next office tower gets built, watch where the next team gets moved. Watch whether other institutions start doing the same quiet math. Because if 95B can move once, it can move again. And if the city doesn't stabilize the fundamentals, the exits won't be loud. They'll be orderly. They'll be professional, they'll be devastating, and by the time everyone agrees there's a problem, the system will already be halfway out the door.